Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and I'm a complete idiot. This is Idiots Anonymous for stock market investors. There's a reason why this channel is called Tuesday Big Guys Trade Stocks. But basically, I try to use long-term market valuation and try to make a short-term trade based upon that, which makes no sense at all. But I lost a little bit of money, and I'm going to talk about why.
Yeah, if you like this kind of entertaining stock market content where it's two super guys trying to figure everything out, give us a like and subscribe, and we'll get started.
Two stupid guys trade stocks.
Boomsies.
How do you think that face compares to Grumpy Cat right there? I'm not really sure.
I honestly can't tell the difference.
Yeah,
Looks like the same
that pretty
photo.
much is. He's actually my father. Um, but this is the CPI data that came out this week. We finally saw like a little bit of a peak potentially in CPI data, which was why the market had a nice bull rally into the end of the week. So, I thought people were going to be expecting it to moderate a little bit from previous months. So that's why I kind of took the other side of this trade. And I had a bearish trade on triple Qs. I had sold it in the money called credit spread in order to try to make a little bit of money as the market sold off. And I was profitable on like Wednesday, but then this number came out and the market took off on me. So I, of course, closed that at a max loss, which was fun. It was only $500 though, but it was still fun and entertaining. We did another video talking about like Michael Burry and this whole build-up effect sort of storyline about whether or not there'll be like multiple phases to kind of the market cycle here,
Yeah.
which is he actually pointed out in another tweet that there's typically 3 inflationary peaks during the whole cycle of inflation in previous U.S. inflationary time periods. So the question there is whether or not this is actually like the peak, or is this just one of the 3 peaks that we could potentially see? By the way, it doesn't really matter as far as that point goes. This has been the SPY over the last year or so, and this like run up here has just been ridiculous. It looks like now in hindsight, of course, you're just seeing it set like higher highs and higher lows all the way up, just stepping up the ladder. It's stupid to get in the way of this. There's no signs yet that it's kind of petered out. This is when you zoom in on 3 month here, it's even a little bit more dramatic as far as like the kind of wave pattern up here. So you know what the hell, at this point I'm going to go ahead and get bullish. So that we'll probably finally actually get our stock market sell off over the next week or so. But I want to take a trade where I think I'm going to be on like the opposite side from where kind of the market dictates, I guess, at this point a little bit. We're talking about the other kind of long-term valuation indicator here that we saw a little bit of contraction in, is that we finally look like we're potentially getting back towards a more normalized, valuation here. This is a Buffett indicator
Right.
that represents GDP to stock market valuation. And we were having a nice kind of run down here. We were getting back into the realm of like reasonableness. But now that with this recent bull run, we've kind of come back out here where we're still in this overvalued territory.
I I don't know if you should go bullish here.
Yeah.
No, so the 200 moving average. We're gonna do a video on this. The 200 moving average is the most important level. Um, we'll go over it, but I think until it passes that, I wouldn't touch it.
Yeah. I got you. So this is actually how you kind of think about that Buffett indicator. It tells you what your returns are likely to be for the next 5 years based on historical data, based upon where the Buffett indicator is at this point in time. And we are currently around here, meaning that the stock market returns should be about flat for the next 5 years based upon this, if this trend line holds accurate here. You kind of
This
get
is
what this
a
graph is trying to show
very
you.
confusing graph.
It is. It is. There's a little bit of a scatter plot here, but the whole idea is that you have this Buffett value indication is on a monthly basis, and then what the stock market returns will be for the next 5 years. So as we come up here, you have kind of low valuations and you have really high returns, and as you come towards this other end, you have high valuations and low returns. Right? Makes sense. If the valuation is already high, your returns are less likely to be profitable. And
Right.
this is just like a best fit data line here that kind of shows you the relationship between the two. So you kind of see this negative slope here as valuations increase. As we move towards the right side of this graph, the next 5 year returns go down. Right?
Got it. Okay.
We're almost at like the break even point right now, around 0%. Yeah, see where it says
Perfect.
current BI value. Yeah, I know, right? So I'm looking at earnings trade on target. I like trading earnings. It's playing with fire, but what the hell? Um, and I did some retail shopping with my wife this weekend, and I was kind of like peeking around at all the inventory that they had on hand and that sort of stuff, and thinking about it from a stock investing standpoint. But with the kind of recent, slightly better number with CPI, I'm thinking maybe the forewarning and the retail sell off we saw here. This is that dramatic move down when Walmart said that they were going to basically miss earnings. We saw this kind of horrible sell off for large retail companies. So I'm going to take Target, slightly better of the two retailers,
Okay,
and I'm
I
going to
do
put a little
like
bit of
Target.
yeah. I mean, like I
So does
said,
both of our wives.
yeah, yeah, it's bad. And then they add Starbucks in there and forget about it. Like I could just drop her off. It's like daycare for adult women. But so I'm gonna do this little kind of out of the money call spread here, call debit spread. Implied volatility is pretty low in the market in general right now, so better to be a little bit of a net buyer of options, I guess, from that standpoint. So the whole idea here is that I would lay out $185 and I can stand a profit up to $315 if Target hits 180 after earnings. It's like 172 right now, 173 right now.
When did they report?
So the 17th, so this week.
This is the ballsiest trade I think I've ever seen you do.
Yeah, I mean, I don't typically do like stuff that's out of the money like this, and then I do like earnings trades. Sometimes you can make a lot of money very, very quickly on like a weekly basis. But it's playing with fire a little bit. The max loss is only $185.
Well,
So
I mean,
crazy.
if it makes you feel better, as soon as Roku reports earnings, we can both short them and just make all the money back if you lose anything. So
Yeah,
it's an easy trade.
yeah, exactly. I agree. But I was just kind of curious. What do you think? You think getting on this retail rebound a little bit might be reasonable?
I think so. One, I do like Target. I think fundamentally they are a very, very good stock. I did not like how much they dropped after last earnings. Man, was it massive. They were, what, 200-ish? And then they went to, what was
220.
it, like 150? Yeah, 206 to 150. That's wild. So they have been slowly clawing their way up. I feel like it's a flip of a coin. I have no idea what's
Yeah.
going to happen. I'm staying away from it.
I think people are just so pessimistic on retail that like I'd be reluctant to kind of join them on that, which seems more logical. I think at this point, I think they can only do slightly better than expectations at this point.
Got it. All right. Well, we will see what happens.
I haven't seen crazy price drops on like lawn furniture, which is the thing I've been looking for.
On
To
lawn
me, it
furniture,
shows
you mean the
they're
most
still holding their margins.
overpriced segment of furniture in the planet?
Oh yeah, I think
it's ridiculous.
insane. Yeah, they're still sitting on it. So retail numbers, I think the inventory numbers are still going to be kind of high, but I don't think the margins will be quite as compressed as people were originally thinking.
All right, there you go. Lawn furniture prices, leading indicator of market health. Okay, there we go.
Yeah. See you guys in the next one.
Later.